Hello, today I'm going to present my Burke & Road team's research on SEACOR Holdings. To do this, first I'm going to describe the company, then I'm going to take you through our research process, and then I'm going to explain our final recommendation. To understand SEACOR Holdings, you have to realize that it's a combination of 5 oil services businesses, shown here, with other services being divided into 2 subdivisions. I'll start from left to right describing these businesses in greater detail, starting with offshore marine services. In offshore marine, various exploration and production companies hire SEACOR to service their oil rigs. This is SEACOR's biggest business. It accounts for $519 million worth of SEACOR's operating revenues, and SEACOR owns $727 million worth of the boats, such as the one shown in the picture. SEACOR's second largest segment uses barges and towboats to transport food products or industrial products down U.S. rivers. This segment earns about half of the operating revenues as the offshore marine services at $272 million. Moving along, we come to SEACOR's third and middle-sized business in terms of revenues. This business uses tankers to transport oil and gas across oceans. Now to SEACOR's fourth business. SEACOR has a 50% stake in a corn processing company to create alcohol for fuel and industrial use. Now, for some reason, alcohol manufacturing is everyone's favorite business. And this might have something to do with the fact that a small percentage of the ethanol is classified as food grade, which can be sold to vodka producing companies. This segment has $188 million in operating revenues, most of which is from industrial and fuel sales, of course not the liquor sales. The final segment is made up of miscellaneous businesses that SEACOR owns. The largest of these include emergency and crisis services, which used to be a full-scale operation before SEACOR sold one of its subsidiaries at the beginning of 2012. The other is commodity trading, where SEACOR buys and sells physical agricultural assets. As you can see, SEACOR positions itself along the supply chain by vertically integrating its business operations. One of the fun things about following this publicly traded company is that during our research it became 2 publicly traded companies. In January, SEACOR spun off its helicopter division to create ERA Group, which trades on the New York Stock Exchange under the symbol ERA. Earlier in 2012, SEACOR purchased $142 million worth of lift boats from Superior Energy in an effort to increase its offshore marine services sector. At the end of 2012, SEACOR renamed several of its divisions. SEACOR has a long history of acquiring and selling assets and divisions, and future renaming of divisions are certainly possible. SEACOR's current market profile is that it is a mature public company with a market cap of $1.4 billion, most recent revenues of $1.5 billion, it's headquartered in Fort Lauderdale, Florida, and it has operations throughout the world. In the stock market, SEACOR is trading at $72.49 as of the day we issued our report. Within our report, our predicted target price is $76 per share, and from this information, we predict that SEACOR's performance will be similar to the overall market. What makes valuing a conglomerate so difficult is that you have to value each of the segments separately. Even more difficult is when they change the names of those segments. For example, offshore marine services may have stayed the same, but aviation services spun off to become ERA Group. Inland river services may have become the same, but marine transportation and harbor became shipping services, a brand new segment. Environmental services downsized to become a small section of other. And commodity trading and logistics shrunk to about 20% of its original size and was split between alcohol manufacturing and other. As you can see, the restated figure is much different. So, now that I've explained this to you, you'll of course be able to go out and value a conglomerate with ease. It is difficult to value SEACOR relative to its peers because its peers only compete in one segment each. For example, SEACOR's debt-to-equity ratio is higher than GulfMark's, but this may be reflective of the fact that it has higher capital needs for its other businesses. On the same note, SEACOR has the highest PE ratio of its peers. However, again, this may be reflected of its other business needs and trends. To undertake this valuation, we use the discounted cash flow method, which we forecast 20 years into the future, and used a weighted average cost of capital of 10.42% to reach a value of equity of $1.4 billion, or $76.75 per share. Now that we arrived at our discounted cash flow value, we can compare it against 2 other valuation methods, shown here. We were thrilled to see that there was such a tight range between the different valuation methods, and averaging them together, we came up with our valuation target of $76 per share. As a side note, for the EV to EBIT multiple, as I mentioned earlier in the report, is that it's difficult to use peers as a comparison for forecasting valuations. In this case, we use SEACOR's own historical earnings to forecast a proper multiple from years that we considered typical. Combined with the target price, we can now look at some of SEACOR's characteristics to make an investment decision. First, SEACOR has reverted to its core competencies by divesting many of its assets. The U.S. offshore markets are looking promising, and America's dream of oil independence has SEACOR's name on it. There's a lot of potential for growing activity in the Gulf. SEACOR has been increasing the size of its fleet. And then on the negative side, Mr. Charles Fabricant is taking a less active position in running the company, as he is now a member of the board. Combining all of this information together, our Burke & Road team feels that this company will perform comparably to the overall market. Thank you very much for listening to this presentation. You can access the full Burke & Road report that my team has put together at www.burkeandroad.org.